And those orders are available for market makers to see. And I'll be going over that later in the course as well, more direct. But with Lightspeed, you can hide your orders, which is nice. So if you don't want anybody to see that I'm buying 100 contracts at Apple, you can hide that. You know, I want to block trade. I want a very simple user interface. It's probably the most common among retail traders. Robinhood started out, but it's probably the worst. It's probably the worst application. Commission fees on stocks and options.
All right, guys. What the fuck? Why did it just come out like that? All right, guys. Today I'm gonna go over my trades that I took recently, and I'm gonna kind of break it down so you guys understand why I took them. Can you guys see my screen? All right, give me a second. What do I think about this week? I have no idea, to be honest. You never want to have a bias. Whatever happens, happens. Make money. Market goes up or down. So it doesn't really, to me, it doesn't really benefit me if I'm just like, oh, I think this is gonna happen, because then it's just gonna make me have that bias. You know what I mean? Like if I have a strong belief that this week's gonna be bullish, then when I go into trades, right, I'm always gonna be like, okay, I think we're gonna be bullish. So I'm gonna look to buy calls, obviously, if I have that bias of it being bullish, right? And then that can fuck you up. That can mess up your trades, and that can mess up your thought processes if you have that kind of bias. So don't, to me, whenever the market opens, I'm like, okay, I have my levels. That's it. I don't really care if it goes up or down. I just want it to go up or down in a way where I can capture and move and I can profit off of it, and then I'll leave. That's it, right? You don't really want to have that kind of bias. Okay, so quickly, let's go over. Let me show you something first. All right. So these are you guys can see the Discord in the background. All right. So I put 3267 entry for puts, right? So when I wrote this, I had already gone into an Amazon trade before everyone else, right? Because sometimes, like with me, right, I run this group, whatever, but it's very hard for me sometimes because it's like I feel like I have this responsibility where I want everyone to make money, but then I have to focus on my own trades too at the same time. I don't want to say I don't want to just cater to everyone else and put everyone else before me, but it'll mess up my own trades if I'm just too focused on signaling stuff. So the first time I got into Amazon, right before I signaled that, and there's a reason why I got into Amazon the first time I signaled that. So that level, that 3267 level, was actually the second level, and the first one is this. Is the first one is the one I got into first, and I scalped it. So if you see this right here on my screen, what happened? What happened the day before? What the level that I have set here? Right. Let me change the color for you guys. That's better. I'm gonna make it purple. All right. So that purple line that you see going across, right? If I kind of zoom out a little bit, what is this level? This one right here. I want to see something first. Let me remove all of this so you guys can see it clear. You guys say that it's long-term support only because I zoomed out of it, right? You would not have known that it's actually long-term support if I never zoomed out. So with that being said, right, You want to always look at the bigger picture first. That's why I'm always telling you. That's why I'm always telling people to make levels on the weekly, right? And then the daily, and then what else? The hourly, right? Let's just look at this purple level that we have here. You see it if let me go on the weekly first. So on the weekly, right, it's still, a resistance level here. If I go on the daily, I don't know. I don't want to kind of count this. You guys see this candle right here? So don't even, I don't really want to count that. But how many times did this line, this purple line, good thing I color coded it. How many times did this purple line get tested on the daily? Can you guys see? 4? All right, let's see. So you have, right? You have 1, 2, 3, 4. And what? 5. You guys don't see it? It's not 4, it's 5. Actually, it's not even 5. 1, 2, 3, 4, 5. Yeah, 5. 5 times, right? And remember, we traded on Friday. We traded on this day. Now, you already see that it's long-term support and it's long-term resistance, whatever the case is. What was it also? If you look at the previous day, what did it treat that level as? It was the previous low of the day, right? Right here. Previous low. And then what happened after hours going into pre-market? It held it, right? If it's holding its support, right? What does that essentially mean? Who's sitting here? So buyers are sitting here, obviously, right? You have buyers sitting at this level. So if it breaks, right? If the level breaks, if it fails to hold, this is what I want you guys to understand. And this is going to make trading so much easier for you guys. When you have levels that are this strong, why do I say that it's strong? I just need an answer. Why do I say that it's strong, first of all? Multiple tests, right? Not on just the 5-minute time frame that we're currently looking at, but also on the daily, right? Also on the daily. If you go on the 4-hour, also on the 4-hour, right? Look, if you see here, there's a reason why there's a reason why the price was so tight here. Why was the price so tight here? The price was so tight here because the seller started stepping in, right? And it's consolidating. When you have a level that's this strong to where if you go on multiple time frames and you're like, wow, dude, like it couldn't even break for a long time, right? Then you want to always focus on these types of levels for the future, right? Like for example, on Amazon, again, right? Before I kind of go over my how I took the trade. For example, if Amazon goes back up to to this level to 3303 and it goes above it, what do you think is gonna happen? It's gonna break out, but it's gonna be such a violent breakout, right? Does that make sense? That's why I say it's gonna be a violent breakout. It's going to be a violent breakout because this level is really strong. It's been tested so many times, right? It's been tested so many times to where, the buyers started struggling first, right? Overcame the sellers here, finally broke out. So it's always going to happen. It's going to happen again if it does break out to the upside, right? Just look at how it broke out here. It finally broke out here. And how much of a move did it make after it broke out? Made like what, a fucking 26, a $200 move up. Although, right, just because it broke out of the level and it made a $200 move up doesn't mean that it's the level that caused it to make that move, right? Which level do you think? Can you guys? It's on here, right? It's on here. Which level do you think really set the foundation for Amazon to kind of propel itself to the upside and settle and literally gather up all these buyers? So Which one? 3265, right? That's the correct answer, right? This level is stronger than the purple one. And I'm going to show you. I'm going to make it blue. Right? This blue level, it's stronger than the, like if I go on the weekly, how many times did this blue level test on the weekly? This is the weekly, remember. Every single candle represents one whole week. So even if it tests once, that's still a very strong resistance level. So 6 or 7, how many? If you guys say 6, right? How many trading days is that? 6 weeks. 6 whole weeks, a month and a half, right? How many trading days is that? That's 20, almost what? Almost 30 trading days. So for 30 whole trading days, it couldn't break that level. You have to understand the what is it? What's the word for it? The amount of, I'm looking for this word, the specific word. It's not significance, but it's a very crucial level because it took so long for this to break, right? And while it was literally, you know, retesting, can you see a pattern that formed? Right? If I go like this, there's multiple. So let me show you guys something, right? What do you guys have? Well, what do we have here? So that's one pattern, okay? Now, if I remove this and I make this, what do you have here? So you have, it does, so there is no perfect, pattern, but you can literally make a triangle and an ascending triangle out of this, right? Both are what? Bullish. So when you have two levels that you can literally make on a weekly chart, right? You're going to be like, oh shit, like, oh my gosh, this might actually break out to the upside. Because you can literally make two patterns within these 1, 2, 3, 4, 5, 6, 7, these 7 candles, which represents how many weeks? 7 weeks. So can you agree with me that Amazon was essentially, if you saw this pattern before it happened, right? And I'm pretty sure some of you guys did, because I posted this shit on my Discord and on Instagram a few times, right? Are you going to take advantage of patterns like this? Now, right, I want to show you something. So the reason why I like the EMA so much, right, is because it literally can act as a support or a resistance, right? But if I make this slope right here, right, this slope, and look at this, and look at where Amazon formed its support. Did it form its support right on the EMA or right on this horizontal line that I made? Is this starting to make sense to people? Amazon had like a flash crash on Friday, past 2 days. The amount of sellers on Amazon was insane, right? You guys saw how fast it dropped, right? Why did the buyers all of a fucking sudden why did Amazon start bouncing at this exact level? I'm just wondering. Does anyone know why? because this is a support line, right? This is a support line. If even okay, when you make these patterns, right, it will act as a support line, right? You know how things break out, and then it retraces to the pattern, and then it bounces back up. So this is exactly what happened, right? This is exactly what happened. So when you can kind of gauge these things, like sometimes, I'll play around with these lines, right? I'll play around with them and kind of see how they treat each other. Like, I'll extend it up here, right? I'll see, right? For example, if Amazon opens above this yellow line right here, this, I'm gonna make it I'll make it purple. If it opens above the purple, what can you say about this trend, this line right here? That it's an uptrend line, right? Now, when you can identify things like this, plus using the indicators, plus having, the common sense, right? You want to make trading easier. Like, for example, right? This is how I want you guys to end up trading eventually, right? So when you're driving your car, are you focused on driving the car, or does it just come naturally? Like, it's just, what's the word for it? It's like muscle memory, right? When I trade now, I'm not really what is this? I'm not really like focused on, oh my gosh, I'm waiting for this indicator, this and that, this and that. I'm waiting for this. I'm like, no. With me now, trading just comes naturally, right? It's almost like second nature for me trading now, right? I'm not saying it's second nature for me to trade, but when I'm executing my trades, it's like second nature. I don't doubt myself. I don't ever doubt myself anymore. If I take a trade and it doesn't go my way, shit, it doesn't go my way. It is what it is, right? Because the number one thing that you need to focus on, other than the strategy, right? Strategy is not that important, to be honest, right? I feel like if you just look, I feel like if you just toss a coin, if you toss a coin on every single trade you take, but you have the best risk management, you can be profitable. I'm gonna put it that way. Right? How many times, don't lie, how many times have you taken a trade and you don't know why the fuck you took it, but it went your way anyways? I just took it. I'm not saying that's what you should do, but I'm saying that you don't have to be a rocket scientist to understand this. That's why, right? Trading humbles everybody. Everybody. I'm mentoring this guy, and he works for IT. He works in the Silicon Valley. Very smart. But when it comes to trading, kind of sucks. But of course, we're gonna change that. But just because, right? This is why trading is literally really, 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 really hard. It can be very hard for people who overthink things. If you can't, yeah, exactly. Paul's right. You can't be too technical when it comes to trading because you can't control the outcome. Right? I feel like so many people are so used to trying to control an outcome. Like, for example, right? If you work very fucking hard, at your job, you're gonna get promoted. So you already kind of have an assumption that you're going to get promoted and you're gonna succeed in that job, right? When you're trading, you're doing all these technical analysis. You're like, oh, I did my best, like this and that. I've been learning. I've been watching YouTube videos, this and that. Does that mean you're gonna succeed in trading? No. Just because, I hate when people do this. Like, oh, I studied for 12 hours today. Studied for 14 hours. and do this. It's not necessarily about you taking the time to study, but it's also being able to control yourself trading, right? That's the hardest thing, because making money trading options is easy. Keeping it is the hardest fucking part. Just remember that. Right? Don't get it twisted. It's not easy. It's just easy to make the money, then one thing leads to another. Then what happens? You fucking lose your profit. Right? There are a lot of things that kind of factor in when you're trading. Like, how many of you have gone into trades, you're up fucking 100, 200, 300, 400, 500, 600, 1,000. Next thing you know, you could have walked away. You could have, but saw something else out the corner of your eye, and you're like, I want that. I want more. Right? You have to be. I'm telling you, it's the hardest part of trading is to just know when to stop, know when to walk away. And I feel like being disciplined, right? If you want to be disciplined when you're trading, right? If you want to be disciplined, you have to kind of be, what's the word for this? You have to be happy with what you have, with what you just made, right? For example, if you took one trade and it ended up being a really good trade, right? It doesn't mean that that you should get overconfident on that trade and then trade something else expecting the same result, right? Because every market situation is different, right? These levels are the same, right? These levels are the same, but the way it moves, pay attention, right? The way these things move sometimes, even though the levels are the same, right? Throughout history, but the way it moves as you're looking at it and how you're feeling at that time that it's moving has an effect on the outcome that you're going to have. Does that make sense? If you come into the market feeling like shit, mad at the world, right? It's going to have a toll on your trading that day. Right? So make sure you're mentally prepared for this when you want to trade. This is what I haven't really told people this, but I see a lot of people, right? A lot of people are here and you guys are like excited about trading this and that, but it can literally be the most self-destructing thing you get yourself into. Don't even get it twisted. Right? And this is the fucking this is the what is it? This is the negative aspect of trading that you need to be aware of. Right? When people lose money, everyone takes it differently, depending on how much money you have, or depending on how you view your money. When you have someone that has, like, if someone makes like $50,000 a month, or they make $1 million a year, or $250,000 a year, or $500,000 a year, and they're using $10,000, how do you think they're going to view that money? They're not gonna really care. Hold on, let me mute some people. All right, now, guys, answer this question. When you have someone that makes fucking $250,000 a year, 500,000, $1 million a year, and they have a $10,000 account, how do you think they're gonna kind of view that $10,000 account? And just don't even think about their expenses or anything. I don't want to get too technical. I'm just saying, someone that's rich, that has the money, that can afford this, it's not that they're gonna give a shit. Don't get me wrong, dude. It's not like they're gonna give shit, but their attachment to that money is not gonna be as bad as someone who makes $50K a year trading with 10,000. Does that make sense, guys? You have to get really deep into this psychological shit when it comes to trading. That's what I love about it. I'm not even gonna lie to you guys. Right? I don't care. Like I don't care to lie. Like my account, it's over 6 figures. Okay. And when I'm trading with if I'm getting into position and it's $1,000 and it's $1,000 to get into a position, if my premium's like $500 and I have 2 contracts, I'm just like, all right, fuck it. Not like fuck it, but I don't really like, I'm not gonna panic on that. Right? I'm not gonna panic on my trades because my attachment to that, to the money that I'm using for every single trade is almost non-existent. Right? Some like people, the people who are losing, who constantly lose, right? They tend to blame themselves, and especially people like, for example, dude, like people who make like 50K a year and they have like a $10,000 account, they're gonna be impacted by losses. Like they're gonna be impacted by if someone loses fucking 10 times, 10 straight days in a row. Like I've had people who come to me and they told me I keep losing. Your confidence is gonna get shot down. Right? Because then the next trade that you take, you're automatically gonna think like, man, oh my gosh, I'm thinking I might lose again. Right? Every single trade that you take is different. Every trade that you take is gonna be different. It's different. So never ever don't come into the market with a pessimistic point of view, thinking you're gonna lose on the trade. Right? The way you should view your money that you're using now to trade is learning money. This is learning money, right? Understand this. Okay, I'm gonna say this again. You guys are in this game. This is a game that you're playing. This is a fucking game. Right? Don't let anybody tell you different. It's a game. You're playing a game here. In this game, right? The weak will literally get eaten alive. Who can agree with me on that? I see people get eaten alive every fucking day. How do I know that? Okay, if the market dropped 100 points, are there people on the other side who lost money? There's always a losing side. Remember that. Just if you made money, that means someone lost money. If you lost money, that means someone made money. Right? Remember that. Right? If me and Paul got into $50,000 worth of calls, and then you have Kareem, Curry, and Anthony and Miles get into $100,000 worth of puts, who's gonna win? Right? Miles, Kareem, Curry, and Anthony will win. Right? Because they're heavier on the put side than we are on the call side. They have more money on the short side than we do on the long side. Right? So let me tell you guys this psychological advice, this more kind of advice for you guys. When you're trading, try to follow the trend a little bit. And what I mean by trend is not, you look at a weekly trend and it's bullish, oh, buy calls tomorrow. No. Follow the current trend of the time frame that you're looking at. Okay? How often did you scale up? How long did it take for you to become comfortable trading so much? Because I'm just, right, I accept the risk. That I'm taking. That's how you become comfortable. That's the answer you guys are looking for in terms of how do you become comfortable trading. It's not the fact that just because you're profitable doesn't mean you're comfortable. I've had weeks where I literally lost every single day, but it didn't change the way I traded. What I did was I looked back on the trades that I took and why I lost. And if it's something that I did, if it's a mistake that I made, somewhere in my thought process that changed, then I'll fix it. Okay? Thoughts on 34 EMA? I don't know. You can use it. These EMAs, I like 9 and 21 because it treats me well. What treats me well might not treat you well. You can use any EMAs you want, right? The point in using it is for the crossovers. The difference between the numbers of EMA. If you have a 21 EMA, you're looking at a 21 average. The last 21 candles, whatever time frame you're looking at, right? Now, let's go over this this trade. So, the first Amazon trade that I took on Friday to the short side was 3303 break. Why? Support, 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 support. Right? Finally broke it. But before it broke, what happened? You guys can walk me through this trade that I took. Right? You guys can walk me through this trade that I took because I already taught you guys the last time we talked on how I do things and how I take my trades. Simple. What happened? What's the first thing that happened? If you can walk this trade down with me, what's the first thing that happened? What do you guys see? So, right, first thing we have, right, if you really want to get technical, you have this high from the previous day, rejected the high. At the open, attempted to go towards the high, rejected the high. Once it rejected the high, look what happened when it rejected the high. Look all the way down. What happened when it rejected the high? So this thing was literally trying to push up, but the momentum isn't there. Does that make sense, guys? The momentum has to be there. Momentum wasn't there. Right? Momentum was not there. That's how you kind of prevent yourself from getting faked out of trades. That makes sense? If the momentum is not there, don't take the trade. There's no point. Now, cross down, right? Obviously, my entry wasn't even hit yet. But I'm looking at this, right? I'm looking at the price action, right? Well, reject. How do you, there isn't momentum while it's going on. Well, while it was going on, I saw it cross down. What do you mean? Right? Come on, look at the wicks. Look at the wicks. Look, guys. Now look at this. Okay? Look at this. If you look at this right here, in the morning, remember, what usually happens in the morning? The first 15 minutes. The first 15 minutes is usually the strongest. Am I right? Now looking at Amazon, what happened the first 10 minutes? Yeah, sure. The first 4 minutes we kind of pushed up, but then you had so many sellers come in. You had a lot of sellers come in here. Just look at the wicks, right? Look at the wicks. You had a lot of sellers. If you look at the 1 minute chart on this, you had a lot of rejection, right? Because remember, you have to also remember the time. Usually every single morning when the market opens, you get this strong fucking run up or down. Doesn't matter. But you usually have a really strong run up or down. Does that make sense, guys? Now, you can take you I took this trade on a 1 minute time frame, but you can take trades on a 5 minute time frame. It doesn't matter. What do you think you guys prefer? What time frame do you think you guys prefer using? Now, when people ask me that, it depends on what you want to do, right? If you want to day trade Amazon with one single contract, for example, right? If you want to take if you want to day trade if you want to take a day trade with one single contract, do you really want to focus on a 1 minute time frame? This is where it kind of makes a difference. If you can't emotionally handle the volatility of a stock, don't even bother looking at a 1 minute time frame. If you're not used to seeing these time frames, these movements, don't look at the 1 minute. 1 minutes are, yes, they're suitable for scalping. That's what it's for, right? Show me a trade where you lost. I'm gonna show you a trade where I lost after this. I lost like fucking 6,000 on Tesla on Friday, just on Tesla. But I basically made it all back with Amazon because I rode the whole way down. But when you're looking at time frames, you have to be you want to use time frame analysis to help you kind of have a better conviction on your trades. But the time frame that you should just keep looking at as you're trading the stock when you're in the position, if you're in it for a day trade, you know that the 1 minute time frame will move like crazy. It'll be really volatile, right? So you want to stick to the 5 minutes. Because if you're just buying one contract of Apple, one contract of Nvidia, one contract of Facebook, one contract of AMD, what's a 1 minute time frame going to do for you? Right? How many of you have gone shaken out of your trades because you looked at a 1 minute time frame and you got scared? And then next thing you know, you get out of the trade and that shit shoots up, and then you look at the 5 minute time frame and you're like, wow. When I'm day trading with small contracts, I go on the 5 minute. I don't care about what happens on the 1 minute because it's just gonna play with me. Now, when I took this trade, right, I bought like 4 contracts at the breakout of 33.03, and I sold it 33.26. Sorry, 32.65. Before I sold it, that's when I signaled for the next one. But you want to be able to, like, for example, okay, how many of you guys are using monitors for your trading? I hope that you guys don't just kind of stare at one single screen on one single time frame the whole time. Okay, you want to have, if you're me, this is my tip for you. If you want to trade if you want to trade Apple or Amazon, for example, right? It doesn't matter what, UPS, what Nvidia, any stock. You want to have at least the 1, the 5, and the hourly, just for that one stock that you're trading. Why? Why do you guys think that you should have at least 3 time frames up for one single stock that you're trading? There's a reason why. Because you can be like me, for example, I can be in a scalp sometimes, and then I'll go look at the 15 minute, and it's still bullish, and it still looks like it's about to break out. Now, the next red candle that I see happening, but I already saw the 15 minute and it looks bullish, do you think I'm going to be phased by that 1 minute red candle? No. Right? Because there is a lot of noise on the 1 minute. There's a lot of noise. But when you have multiple time frames together, so you can see the bigger picture, it's going to help you be a little bit more confident. That's what matters, right? Now, if you go back, if you go look at the 15-minute, for example, I want to ask this: how many minutes into the market do you guys start looking at 15-minute time frames or 5-minute time frames or hourlies? Right? So with me, I like to start off on the 1 minute first. For the first 10, 15 minutes, because what's the point of me using a 15-minute chart or a 5-minute chart if the market just opened? What am I looking at? Fucking nothing. Right? The only thing I care about is what happened the previous day. Now, even if I open up a 15-minute chart and it's still showing me what happened the previous day, sometimes it's still not gonna look like anything. Right? So I have the 1 minute time frame on the first 10 to 15 minutes, just for the first 10 to 15 minutes. And then that's when I start adding on the 5-minute and the hourly. Right? Now, if you look at the 15-minute here, right? Before even, getting into this trade, if you have the 15-minute, right? What do you already see? For example, before even taking this 3265 level to the downside, the last the first even before the market even opened, when you see these candles and you see the whole market failing, what direction are you looking to take? This is without even looking at I don't even need the EMAs to see this. Right? You have all of these candles that have a lot of selling pressure on them. Right? Now, what you're waiting for is for your level to break, and then you enter when your level breaks. Right? When do you exit? That's like the most common question too. When do I exit the trade? How do I know if my exit is the right exit? If you don't have a next level to the downside, I'm telling you guys this, right? Puts, when you're shorting the market, it's easier when you're shorting the market why do you guys think it's easier to short the market and have an exit and know when to exit? Because you already have these previous levels set up. Does that make sense on why it's so much easier when the market is tanking to make money? But when you're on the long side and the stock is at its all-time highs, that's when it's harder, because you don't know when to sell. You're like, oh fuck, when do I sell? You can use Fibonacci levels if you like to. Are EMA stochastic crosses pre-market valid? Yes, they're valid. If it's close enough to where the market open. If it's close enough, if it's like for me, I only take it as valid if it happened 15 to 30 minutes before the market opens. Does that make sense? How do you set the levels? Do you have them preset in your chart? I don't think you watched the first, I don't know if you were here, the first class that we had, the second class. Did I go over levels with you guys? I don't have to go over them again now, right? Now, when you're trading these setups, right? I feel like I said, everyone's just looking for the best strategy. Like, dude, it's not about the strategy if you can't even execute your trade. right? I want you guys all to just practice trading this week. Don't even focus on the profits or the money. You got to get used to it. You got to just get used to seeing these levels move, right? How many of you guys like this, for example, this situation? You get into a trade, you're up $500. Price reverses for a little bit for like 2 minutes, and that $500 that you're up is now fucking 200. And then you start panicking and you start selling because you don't want to lose your profits. You don't want to lose it all. And the next thing you know, 5 minutes later, I should have held. Right, guys? If you guys do this way too often, you can change that. Right? When I'm in a trade and I have my level set and I see that the price action is literally telling me that it might continue to go in the direction that I want. But you have to understand there are going to be pullbacks every day while you're in a trade. You know, sometimes you're going to get into a trade and it's just going to continue to go down to your direction, or up. But more often than not, you have to be able to hold through these different pullbacks. Right? You have to be able to hold through these different pullbacks. If it's like this, for example. How come sometimes when you signal plays, how do you call it to the exact cent to wait before entering? How do you call it to the exact cent? What do you mean? When I have these lines, I'm just gonna say 3265.06. Now, how to choose stop loss wisely that I don't be a victim of a normal pullback? Okay, that's a good one. It's a really good one. How much does Amazon move per day, guys? Okay, let's say you're looking for a $50 move. Okay, let's say you're looking for a $50 move and you know it's possible because the market just opened and it broke your level, blah, blah, blah. Now, since Amazon makes $100 moves per day sometimes, why do you get scared of a $5 pullback, of a $10 pullback? Does that make sense? I think people just don't like it when the trade goes against you, like, or when the trade's not going your way. It's gonna happen. I've been into trades where it's like, ah, fuck, I'm immediately up like 500 or 600, and then it goes back down to me being up 200, and then I have to wait for buyers to kind of step back in. Right? No, I don't use trailing stop losses. I don't use any of that. I don't. I think you guys like to overcomplicate your trading. That's why you're not doing very well. When I get into, this is what I'm gonna do too. I'm gonna start trading live, like show everyone like video live. I'm gonna have a video live to show you like my reactions and how I look. Like, you're gonna see that even if I'm down 1,000 or up 1,000, like, I don't give a shit. Not that I don't give a shit because of the money, but I don't give a shit because I know myself. I know my strategy. I'm confident in my positions, not for it to go in my direction. Don't get me wrong. I'm not confident for it to go in my direction. I'm confident in my risk management because I've been doing this. I'm trading like fucking literally sometimes 6 or 7, 8 times a day. And I know that's not a very good thing to say, but I have a responsibility to where I feel obligated to have these setups, and I'm signaling stuff to people. Of course, I'm going to have to get in it too. I'm not going to just signal something and not be in it. right? I get the terminologies. I think I just need to see a trade and how to execute. Now, I feel like a lot of people too are kind of lazy to do it for themselves, right? You're only gonna get better when you see that you see that you're progressing, when you're making mistakes. I think that's the number one thing, because when you're trading, what's a mistake gonna cost you? Money, real money. That's why people fucking get so scared, because a mistake costs, it's gonna cost you real money. And you have to understand, like I said, right? Come on, guys, you're in the game to risk. No. Tesla. You guys got my Amazon trade? Do you need me to go over it still? You guys understand why I took it? Do you have your stop loss and target at the time of entering a trade? Hard one or just in mind? If I'm down 15, 20%, if I'm down 15% on my trade, I'm out. No VWAP, no. If I'm down 15, 20% on my trade, 20% to me is bad. It's like, fuck, I don't want to be down 20%. That's how disciplined I am when I'm trading. Guys, that's how disciplined I am when trading. I don't hope. What put Amazon in your radar? Guys, what put Amazon in my radar? Why am I always trading Amazon? Why? There's a lot of volume. It's always moving. It's liquid. Name liquid stocks that you guys can think of right now. Look, everybody's saying the same thing because that's all we trade. It's all you need to trade. You're trading options here. Remember that, right? You're not trading penny stocks. You're not looking for these. You're not going to have a watch list with fucking 200 stuff, 200 names across the board. And you're like, what do I trade? All you're looking for is your contract to go up in value. And then you sell that contract to someone else. Do you trade strangles, butterflies, anything like that? I trade put, credit spreads, debit spreads sometimes. I don't really do strangles and straddles anymore. It's like this. If I'm a professional basketball player, do I need to go and be a professional golf player? If I make enough money being if LeBron makes enough money playing basketball, does he need to go learn to golf like MJ did? I mean, MJ's just MJ. But that's like the example I'm showing here. Yeah, it's good to understand these strategies, right? But if you can make good money just buying simple like naked calls and puts, then just do it. Just get better. Just get better at executing. That's what people need to get better at. Not understanding these strategies. If you're not profitable, if you're not consistently profitable, there's no reason for you to try and go learn everything that options has to offer. Does that make sense? Like I feel like people are like, hey, like over here, like you fucking learn for 1 month and you're like, oh, hey man, can you teach me how to do strangles? Bruh, are you even profitable this month? You guys get what I'm saying? You need to focus on one thing first. Focus on this. Focus on being profitable first. Like this is why I hate when people are always like strategy. Dude, you need to be able to kind of get comfortable in the game first. Get comfortable losing money, to be honest. Get comfortable making money here. Right? Does that make sense? I don't know how you guys view money, right? And it's gonna be different for everyone to determine whether you're gonna be profitable or not. It's gonna be different. Like Paul and Kareem, They can trade differently from each other and they can view money differently. And Kareem can be more profitable than Paul, even if they have the same strategy. Why do you think that happens? Personality, mentality. Now look, let me take you guys deeper down the motherfucking rabbit hole real quick, right? If you're really good at what you do in your job and you have this person, you have this go get it mentality, and you're like this alpha dog, and you're so used to being the big man in your job, and then you get into trading. How do you think you're gonna start trading? What's your expect like what are you expecting when you're trading if you're that type of person? You're expecting to be the best. You're just striving to just you know be the best because that's what you're used to, right? That's how people get fucked over. To be honest, that's how people get messed up. That's how people get fucked over because you're like, oh, dude, no, like, there's no way I can't be good at this. And then you start taking losses, trying to get back those losses. Everything starts to kind of have a domino effect. How much did I start? I started with like 10. I started with 10,000, turned it into like 30, and then I started adding money into my account. I didn't just listen. People will tell you, "Oh, I turned a 10,000 into a million." Like, dude, it does happen to people. Like, people do that. But for the most part, you need to understand that you need to have multiple sources. Like, this is like the number one thing that I think people kind of get baited on. You need to have multiple sources of income, or you need to have an income source other than trading to keep. You need to keep funding your trading account. That's what I'm saying. To help it grow too, right? But that's what I do. I keep putting money into my trading account. Yeah, I'm trying to grow it, right? But if I want to size up my positions, I'm not gonna wait fucking 6 months. I'm as long as I'm comfortable with trading my money, trading the money that's in there, I will keep adding on to it. Should there be a cap of what to trade with? Shit. I think if you get into more than 30, if you get more if you get into more than, for example, guys, if you buy 50 contracts of Amazon, guys, if you buy do this math. If you buy 50 contracts of Amazon, how many how much of Amazon are you in control by buying 50 contracts of Amazon, and Amazon's trading at $3,000? Amazon's trading at 3,000 and you have 50 contracts. How many shares is that? 5,000 shares. What's 5,000 times 3,000? 5,000 is nothing. 15 million. You're controlling $15 million worth of shares when you buy 50 contracts of Amazon. Think about it. What if these little institutions or these firms see that and they're like, oh, they go and trade against you, and then they go buy fucking 100 contracts. Who's gonna follow them? And then who loses their money? Right? This is for people who have a shit ton of money to play with. There is, to me, in my opinion, right? This is my opinion. There is a limit to how many contracts you should buy. Like, for example, who the fuck, like, okay, I'm talking about myself here, but I bought 30 contracts of Amazon before on a Friday at fucking 10 o'clock. At 10 o'clock, I bought 50 contracts. Guess what happened after? Guess what happened after? Just someone guess what happened after. I lost that trade. I fucking lost the shit out of that trade. I got clapped. Not even because of the theta, guys. No, you guys are too technical. What do you think happened to me? Why did I lose on that trade? I went something went against me. Remember, that's the answer I'm looking for. Something went against me. Because it's a Friday, right? Because it's a Friday and it's midday. What do you guys think usually happens on Fridays? The volume is low. It's usually a sell-off day, low volume, right? When you want to get into these big positions, you have to be careful, like really be careful. Like for example, now when I buy like more than 10 contracts, like I'll buy 10 and then I'll buy two. I'm not saying that my position has an impact. No, it does nothing. It's just that I don't want to get reversed on if the volume is low and I'm over here trading. What were your biggest struggles when you first started trading? My biggest struggle was grasping the fact that I can't control the outcome. Does that make sense? No matter how good I try to be, no matter how fucking, no matter, no matter, Fabian, I see. Eh, no matter how good you try, no matter how good you try to be when you're trading, that was my problem, guys. That was like my problem. You know why? You know why? It's because of this. It's because when I started signaling stuff, like I was helping people make money, this and that and that. And what do you think? What do you think happens when people kind of give you like praise? Like when people like tell you like, oh shit, like thank you, this and that. What happens? What do you think happened? My ego. My ego got the best of me, and then I started, being a little cocky prick to myself, like, oh, I got this. This is easy. How many of you've had this have been into these types of situations where you take some trades, you think you're hot shit. You start calling everyone up like, come on, start trading. It's easy. It's so easy. You need to start trading. Don't lie. How long did it take to become profitable? See, when people ask these types of questions, do you think if it took me 6 months to become profitable, and if it took someone 2 years to become profitable, who agrees that it's different for everybody? It's different for everybody because someone might not be comfortable trading after they've been trading for 3 years. They're still not confident. They're not risk takers, for example. Jonathan Sheen, I'm a year deep into trading and I'm still down 20K. All right. But how are you trading now? Are you like, I just want to ask you this, right, Jonathan? Are you still confident? I'm pretty sure you're confident in your trades. Like you're not, like you can be down money for the year, but since you've been trading so much, right? Since you've been trading so much, you're comfortable with risking money. Because you've taken so many trades. You've taken so many trades. This is the thing. So here, this is what I hate. Like, for example, here. So let's say you have someone that's been trading for 20 years. Someone that's been trading for 20 years, but what they do is they trade one stock a day, 2, 3 times a week. But then you have someone who's only been trading for 1 year, but he's taking literally, you know, 8 trades every single day for like a year or two. Who do you think has more experience? Just because someone's been in the market for 10, 20 years doesn't mean shit, to be honest. You guys agree with me? It doesn't mean shit, especially if he's only trading fucking one stock a day for 3 days a week. If you're trading eight, I'm not saying go and trade 8 different stocks a day, but if you trade 8 stocks a day for 2 years, 252 times 2 times 8, that's a whole lot of trades. And I mean that as a good thing for that person, because you're used to these price fluctuations. You're used to it. You're not gonna get phased on a pullback. You're not gonna get phased because you already know. You can already see. Like, you've already seen movements. You're already like, oh fuck, this happened 2 weeks ago. Now, do you look at option? Nope. Sometimes. Why is everyone always asking that? You guys are gonna see when I put myself on live. Yeah, you guys follow these big traders and just want to trade like them. Be yourself. Sometimes I watch it. I only watch it on critical levels. But you have these fucking red and green flashes right before your eyes. The reason why, because look, you get to see these orders, right? When you're watching the tape, and you wanna look at them on critical levels, on the levels that matter. You don't want to just stare at them every single candle. You just focus on them at breakout levels. For example, if you have a symmetrical triangle with the stochastics crossing up, with the EMA crossing up, volumes high, you watch the tape, you see a lot of people buying. Is that going to help you? Yes. But if you're just looking at the tape on every single candle before it even hits a level, will that help you? No. Now let's look at Tesla. Show you guys how I lost money on Tesla. So look, this is what I did. I bought calls while the market was dumping, literally. I don't know why, but I bought calls because of how strong it moved up here. And here, do you guys understand how bad Thinkorswim has been? It's been really bad. It's been really bad. So look at the 1 minute, okay? So if you guys look at this, where do you think I entered at? Which minute do you think I entered at? If you can see, if I've shown you the way I trade, which I have, what do you think I entered at for calls? Here. Who got it right? I entered right here. Who got it right? I entered right there. I got filled for 10 contracts. Okay. And then Thinkorswim decides to lag. Couldn't get filled. Couldn't get filled. Couldn't get filled. Couldn't get filled. That's how I lost money. Because sometimes, right, when I'm using Thinkorswim, and everyone will have this problem too, it gets very fucking frustrating when you get into a trade and you're trying to sell it and it doesn't sell because it's lagging. Why would you enter that close to resistance? Why do you guys think I would enter this close to resistance? What do you mean this close to resistance? It broke, right? And yeah, I know that. I know that there was a resistance on the previous day. It created the same high, right? But I didn't see that when I was taking the trade, and I was going to show you that after. But I'm used to trading Tesla, and if you're used to trading Tesla, then you would know that it can make these violent moves. Should I use market orders to enter or exit? Okay, oh, that's a good one. So I only use market orders if my limit can't sell. Keyword sell. I only use market when I'm trying to sell. If I can't get filled and if the price is tanking. Does that make sense? If the price is tanking, I'm gonna market it. I don't care because it can end up being a lot worse. And also, right? Just look at the 1 minute on Tesla. Okay. It met my criterias other than the volume. But sometimes when I get into these trades, I'm so like in the moment that sometimes I'm not focused on everything else. And that's me being honest here. Right? So how many of you agree? Sometimes when you're trading, you're so in the moment, you see the price move up so much that you don't even bother looking at the indicator. You just get in sometimes. Right? So that's something I did. Right? But my Amazon trade that I took after, which I caught like a $70 move down, made up for it. And also, here's the thing too. And again, I'm gonna be honest here. When you're trading, this is my opinion. When you take a trade, where was my exit here? I exit somewhere around here. I don't want to go look at my order. Somewhere around here. Like I lost this whole way down. Look, guys, pay attention. Your Apple signal made me money while I was in Cal. Good. But what was I saying? Hold on. Oh yeah. Sometimes I don't focus on these indicators because I'm so used to seeing these prices. Right? And that's gonna happen to you. But risk management is always key. Right? How many of you guys how many of you guys used the strategy this week? How is it? Did it work? So here's what you're gonna notice. Which strategy? The strategies that I showed you guys. The only way you're gonna be comfortable is by what? Over and over and over. What's the word for that? Starts with an R. Repetition. That's how you get good at things. Repetition. And not being scared about risking money because you're in the game of risking money. Okay. Because to simplify things when you're when you were talking about strategies is what are you essentially doing? If you can tell me in one sentence with like 10 words a strategy that works every single time almost across the board, what is it? Okay, maybe I said this wrong. So all you're looking for when you're trading is levels of supply and demand, and you trade off of those levels of supply and demand, because those levels of supply and demand are, can you agree with me that when you're looking at these levels, when you're looking at prices, you're looking at fear and you're looking at greed. That's all we're looking at, right? The market is about fear and greed. That's all you're looking at. Just remember, that's me simplifying how the market works. Fear and greed. There's fear, there's greed. There's fear, there's greed. There's fear, there's greed. What are we looking at? What are we looking at here? What are we looking at? What are we starting to look at? Fear. What are we looking at here? Greed. That's it. What do you guys think is going to happen tomorrow? What is, like, for example, right? I'm going to show you guys before I end this. I'm going to show you guys. You guys want me to show you the setups for tomorrow and how I look at how I look for them, how I prepare myself for the next day? This is probably going to take me like 10 minutes. So I'm sorry, not tomorrow, for Tuesday. All right. So this is what I do. So I'll start off with like Apple. Go on the weekly, kind of see how it's been, right? Obviously on the weekly, it looks bearish. And this did have a crazy move. So I don't understand why people kind of like panic about a sell like this when we've been green for so long. So long. You guys have to understand, people take profits. Do you guys think there were people who swung Apple 3 months ago? Tons of people. You have to understand, people take profits and it's normal. So I'm looking at the weekly, it looks bearish. I'm looking at the daily. I'm not gonna say it looks bullish, by the way, just because of that. But what I do see is I see a lot of buying pressure coming here. So what I'm gonna do is let me remove everything. I'm gonna make my lines. I'm gonna make a level here, make a level up here, make a level here, make a level here, and here, and here. For if I don't see anything, I'm not even gonna bother touching it. You guys see why I made this level, right? This one I just made right now. You have one touch, one, and then you go on the left, 2, 3. That's it for the 4-hour. Oh, I'm gonna make another one here. Then go on the 5-minute. Now, what do I do when I have two levels that are really close together? Like this 121.12 and this 120.3. What do you guys think I do? So what I'm gonna do is I'm gonna make a box. Make an hourly box. No, let's make it on the 4-hour. I'm gonna make a box like this, stretching like a week. I'm gonna color code this box. Make it red, my bad. Now that I have this box, let's go. Let me change the time axis on this. Make it like 300 bars. Let's make it 400 bars. 1,000 bars actually. Okay. When I have this now, what is this box telling me? No, no, and no. This is telling me that there is what in this zone? There are sellers in the zone. Why are there sellers in the zone? So I make the zone to let me know, right, that I'm not gonna buy calls within this zone. Obviously, I'm gonna wait until the price goes over 121.12 to enter. And then if the next day, for example, if let's say we break out and we come back down through the zone and the price is in the zone, what am I gonna do? I'm gonna short Apple even while it's within the zone, because I don't want to miss the momentum that it might have, because I made the zone for a reason. Does that make sense, that part? Right? So for example, for my watch list, I'm gonna post today. I'll post it on Twitter too. So I'm gonna have, this is my what? My first what? Entry level for calls. Does that make sense? Now, you can have this level right here as your exit, or you can have this level right here as your exit. Which one do you think is stronger? This one or this one? Likely the previous high, which is this. Maybe. But you have to also understand, right? This is how you kind of not sell yourself too short. If the market makes a nice little run, if the market if the whole market ends up being bullish on Tuesday, do you think Apple is going to have a problem breaking this 122.66? After it's gone down about $16? No, right? Because at that point, right? What is the overall goal for Apple? Not yours, but what is the overall goal for Apple to do? To retrace and recover, right? Retrace and recover back to its high. right? So when you have that kind of when you have that in the back of your mind and you're like, okay, you should have no problem holding through things. Now, if you see, for example, if you see that the EMA start crossing at this level, what do you think you should do for Apple? If you see the EMAs cross and you see the stochastics go up here, what do you think you should do for Apple? You should answer calls to what? To swing it, right? Swing calls to the upside. If you want to be able to capture big moves, you have to swing stuff. You have to be comfortable holding things. And sometimes you make more swinging trades than you do day trading. Because sometimes when the market is bullish, when do these stocks make 30% of its moves? Maybe 40% of its moves. Pre-market and after hours. Understand that. That's why I'm always swinging stuff. I'm probably the only one on social media who's always fucking swinging stuff. What if sell off more on Tuesday because markets don't bottom out on Fridays? Well, if it sells off more on Tuesday, then it sells off more on Tuesday. When I'm swinging stuff, I'm looking at the hourly and the 4 hour. Now, I have my level for Apple, which is going to be 121.12, and my first profit target is 122.6. What's my next level for calls? You should always have at least 3 entries for each stock that you're looking to trade, just in case you miss them. And when you have these entries, they have to align with what the ATR of the stock is. Does that make sense? If Apple has an ATR $4 now, and it's already moved $3.50, is it worth it? Is it worth it to take the trade? No, definitely not. Because you're pushing it now. Right? There is no risk to reward at that point. Risk to reward is determined by the ATR and how much room you think the stock has to move. Now, let me remove this box, right? Let me move this box. If Apple has an average range of $4 every single day, and it hasn't really made a move from where you want to enter at, how much do you want to risk for that $4? For that $4 move, for example. So if you want to determine, risk to reward, this is how I'm going to determine my risk to reward for Apple, for example. So I'm going to be entering at 121.12. Okay. Now, let me take this off. If your profit target on Apple is around 123.36 here, right? This is how I'm going to make my risk to reward. What is this? This is my risk. And what is this? This is my reward. What do I have here? A 1 to what? 1 to 2, 1 to 3. It's a little bit more than 1 to 2. but I'm risking one to make two. This is how you avoid being this is how you avoid like getting scared out of trades, or this is how you avoid not having confidence. You know your stop loss, you know where you want to get to. You're risking one to make two. As long as you understand where and how much you're risking versus how much you're looking for the stock to go up, then you'll be fine. So stop loss below red. No, my stop loss is not below red. Where is my stop loss, guys? My stop loss is anywhere in the red. My stop loss is in the red. It's in there. Anywhere in the red. Now, because once if it starts breaking down this 120, 112, right? Then you might get a lot of sellers come in, for example. It can fall fast. So my stop loss is going to be anywhere in the red. If it falls below the red before I can even sell it, right? Then you're going to have to just sell it at like a market order. Don't be one of those people who hold on to their trades hoping for it to go back up, because what is that creating? You're creating bad habits. All right, now let's talk about shortly before I go over some more analysis. Kev, theoretically speaking, if I had a six-figure account and I could afford longer expiration dates for my options, 6 months, for example, are such moves common? And better yet, would you recommend it? Yeah, of course I recommend going out 6 months on stocks that you think have enough room to run to the upside. Can you guys name what sector is lacking right now? Airlines not a fucking sector. Financial and industrial. You have to watch out for these rotations. I already have calls for JP Morgan, Goldman Sachs going about 6 months just in case. And I have Boeing, American Airlines, and Delta going 6 months just in case. Because tech's been leading, right? And the market is pushing up. People think that the market people think it's too much right now. People think that, oh my gosh, the market's fucking rallying like fucking crazy. Blah, blah, blah. People think it's overbought, but you have to look at the sectors. Look at Goldman Sachs. Look at Goldman Sachs on the weekly. Have we recovered? Have we even recovered? Look, this is the high before what? This is before what? This is before the Rona. This is before the Rona. Now look at this. Guys, yeah, I understand that Amazon's, been going nuts because their sales and stuff. Where what the hell? Where is the Rona? Right here. It's right here, right? I understand that these tech stocks are making runs because they're making so much money, right? But you have to understand, right? Look at airlines. No matter what you hear on the news, no matter what you hear on the news, do you think that you guys know what the fair market price of Boeing is? The fair market price, the actual fair market price. The fair market price of Boeing right now, if you go on like simplywallstreet.com, is 350. It's at 171. I'm not saying it's gonna fucking go up tomorrow. No, I don't. It might go up next year, but that's the fair market price for Boeing. That's how much the market, all these analysts think that Boeing is valued at fairly, right? It's gonna move eventually. It's just a matter of when. And then if you look at J.P. Morgan, so my tip to use this, like my tip to use this: swing some trades, see how it goes. Because imagine if you swung Tesla a year ago, buying a lead call, and you spend, you go like $400 out, and you spend like $700 on. I mean, I'm sorry, not $700. You spend like 1,000 on a call that is a year out, almost a year out, 400, 500 strike prices away. You guys are saying, I wish, I wish, I wish. But look at something like AMD. Do you guys think AMD has room to run up even more than $94? Have they had any stock splits, anything like that before? No. Who's worth more, AMD or Nvidia? Nvidia is worth more, obviously. So now, who do you think dominates the chip industry right now? Who do you think will continue to dominate the chip industry? Intel is fucking no. AMD is like 10 years ahead of Intel, in my opinion. Now you guys are talking about all these, what they're doing, but I'm trying to give you an idea of, like, this is what I'm starting to do too, is I'm starting to try to catch on to these trade to these contracts early, because guys, I had lead calls on Tesla that I sold in fucking January, and I bought it in November, and it expired in like, when did it expire? It expires this November. It would expire this November, but I sold it 2 months after I bought it. That's what really pissed me off. Obviously, I wouldn't try to I probably would have sold it in like July or August, but just that taught me the value of patience. Does that make sense? Like, it taught me, like, oh fuck, my my contract this my contract could have been this, my contract could have been that, if only I was patient enough. Next trade. No, you don't. Now, Facebook daily, on the weekly first. I don't really need to make lines down here. Why do I not need to make lines down here? Why should I not even bother right now? Exactly. It won't go down that far tomorrow. Okay. No, I don't. I don't do that. I mean, you can if you want to. I just don't feel the need to. Why do you guys think I don't feel the need to like use Fibonacci retracements, for example? I could, but right now I don't feel like the need to. No, it's not even because of that reason. Because what I'm doing now works. Does that make sense? Like people are always asking me, "Hey, why don't you use this? Why don't you use that?" Why do I need to overcomplicate things when I already have it as simple as it is? Because this is the thing, guys. If I start doing all this extra stuff, which could potentially help me and or not, because I don't have a broken system, right? What I'm doing works. And then here's the thing. Here's the crazy part, right? If I start adding stuff and yeah, if it starts working, what am I gonna have? What am I gonna have towards these new systems? Starts with a D. Anybody gets the word? Starts with a D. If I start using new things and it works, what am I gonna have? No, it's not distractions. Dependency. I'm gonna start being dependent on using these. Does that make sense? How many of you can agree that this system that we use is simple as fuck? It's so simple. Simple and it works. Simple and it works. If it makes you money, just keep it. Of course, you want to broaden your horizons and do more. But to be honest, if you have something that works, then don't even try to toggle with it even more, because there's a reason why it works. It makes sense. Right? I didn't just come up with it. I added, this is what I did. I watched so many videos on trading. I learned from a lot of people through watching their videos, and I combined everything that I learned. I took bits and pieces that I thought were the most valuable, and I wrote them all. I wrote them all down on a fucking piece of paper. And I took bits and pieces and I combined them together to make something of my own. Does that make sense? For example, you guys look, right, I'm pretty sure, how many of you guys take trading classes like other than like mine? Are you guys taking bits and pieces from everything that you learn from everyone and you are making your own? No, don't get me wrong. Like, loyalty is loyalty. I don't care. I care more. I don't care who you're learning from, whatever. All I care is that you're consistent and you're profitable and you're happy with your trading system and you make money. That's all that matters. Right? Don't care who you join. I don't care. As long as you're using you're helping other people make money too. with what you're doing, then that's that's what matters. Okay, so I have my levels for Facebook. So now 283.33. Here's how I determine whether they're too close to each other. What's Facebook's range, do you guys think? Like $10. Right? Now, a $1 move on Facebook is not a big deal. You guys agree with me? So my levels for this is going to be 284.77 for calls and 283.33 for puts. My profit target for my calls is going to be from 284.77 to 287.19. You can take profits in between. What did I say you should do to try to capture the most moves without giving up too much? No, you buy more than one contract. Right? You buy more than one contract, you sell it, you sell one as in the middle of where your profit target would be, and you leave the other one to run. You let the other one run. Right? Well, here's a strategy that you can do. If you're buying a call, if let's say the price of Facebook is, what is it? Let's say it's $300. That's how much Facebook is trading at. And you buy a call for a $300 with a $300 strike price, and it's like $500. You buy that one, right? Boom, you buy it. Then you buy a 305 strike for $250. Which one do you sell first? You sell the one that's gonna make you the more money. You sell the one that's gonna make you more money, which is what? The $300 strike price, right? You sell that one first, and you let the 305 strike run. Because here's the thing: if you buy two of the same contracts, if you buy two $300 strike calls, you take one profit in the middle, and you let the other one run, but the other one ends up tanking back to your entry. What happens? You're giving up too much. You're giving you. It's not the fact you're losing profits. You're just giving it up. You're giving up too much. You want to choose a smaller contract with a slightly lower delta, so it doesn't affect your profits from your first call too much. Does that make sense? If you buy a call with a 50 delta, you want to buy another one with a 25 delta. If you buy a call with an 80 delta, you want to buy another one with a 40 delta. I never buy two of the same. If I'm gonna let one ride, right? This is not. I'm not talking about scalping here. I'm talking about capturing percentages, right? You don't want to buy more than one of the same contract if you're gonna let things ride. Does that make sense? When I scale things out, it's never with my initial contract that I first bought. Never. Kev, what if it's a fake out? What if Facebook opens above 284.77? What if it opens above there? Now, it's a good question because it can. Now, you have to let things settle if it opens above 284.77, right? Here's the thing. You want to always switch up your moves when you're looking at the stock. And if it's in between, if it gaps up pre-market and it's going in between, right? This is what I do. If I'm going to enter, if I'm really, really looking to enter Facebook, what am I going to do? This is what I'm going to do. My new entry becomes 285.68. Does that make sense, Kareem? My profit target is going to be shorter at that point. If it opens above 285.68, then I'm going to wait for 287.19 to hit because I don't have any other critical lines to choose from. I'm just going to wait. And if it opens above 287.19 on Facebook, I'm not even going to fucking trade it. We were right here. Like if it makes this big of a run, I'm not even going to trade it. If it goes above 287, I'm like, nah, I'll choose something else. Let's go to Tesla. What's my levels for Tesla? Go on the weekly first. Do I prepare for the downside? Guys, what do you mean? What's my entry for puts here? What's my entry for puts? No, where's the price at? Where are we at right now? 281.85. What's my entry for puts? 280.81. What's my profit target? 278.32. You sell it in between, doesn't matter. Tesla. What time is it? What the hell? It's 8? In 2 hours? Wow, dude. That's crazy. You guys are taking advantage of me. Today was supposed to be an hour. But I'm not even done making my watch list, so you guys can stay if you want. No need to thank me. Only thank me if you start being profitable. Listen, right? I value my time. But what am I doing right now with my time as I'm showing you guys this? I'm doing something that benefits me and the group because I'm making my levels as I'm doing this, so it's not even a big deal. I'd rather do this than fucking watch Netflix or be out. I was out all weekend. Now I have my levels for Tesla. Oh, okay, look. The one thing I want to show you guys. You guys see the big ass gap from 400 to 420? You don't want to have it. You don't want to have shit like that. You don't. That's too much. That's too much room. It's gonna sell off in between. So you want to fix your levels. You want to make sure you get it all right. So now this is my levels for Tesla. What's my entry for calls? 393.91. My profit target for that is going to be 400.20. Now, if Tesla has an ATR of like $20 or $30, $40 still, right? When you have a profit target and you have a next level here, right? Sometimes it's gonna move way too fast for you to be able to re-enter at that same, like right after that same profit target. So it doesn't hurt to kind of wait for things to play out. Does that make sense? Because remember, I feel like a lot of people are trying to pour fucking money in the first 30 minutes. Like I feel like a lot of people do too much. Like they just end up using up their whole account the first 15 minutes and then they get mad because they miss the rest of the moves for the day. Anyone have that issue? Preservation of capital is important. I know I don't even use up freaking 50% of my account because I don't need to. Right? I think that a lot of people, especially, everyone, I feel like even I have this problem. Just because you have $5,000 in your account doesn't mean you should use up all 5,000 every single day. Who here uses up their whole account every day? Whether even if you're growing it doesn't matter. I never use up the majority of my account. Now, I never use up one of the other reasons I don't use up the majority of my account is because if I take a hit, how am I going to try to capture? How am I going to, if another opportunity presents itself to me to where I can potentially, gain that loss back through a good setup, how am I going to take the trade if I don't have anything else in there to use? For every single trade that you take, you need to make sure you have the same amount for a recovery. Does that make sense right there? Because you never know what can happen. Your order might get filled shittily. I mean, shittily. That's not even a word. Your order might get filled like shit. A lot of things can go wrong when you're trading. Trust me. Sometimes it's not even you. It's the stupid broker, and now you have to suffer a freaking 20% loss on the trade because this dumb broker can't even fill your order. So when you're taking trades, make sure you have enough to try to cover another trade that you can potentially take if you take a hit on that first trade. What delta strike should I choose? What do you mean delta strike? Delta, if you want to choose delta, it depends. It depends what you can afford. That too. Jonathan's right. For example, this is what I hate. I hate when people say this. It's like, oh, I swung a call. But I'm not up. But this is what happened. So let's say they're trading XXX. They're buying it on Wednesday. Right? They're buying it on Wednesday. They're selling it. I mean, they're buying it on Wednesday, but it expires on Friday. Now they spent let's say they spent $300 on this option, on this contract. And let's say the delta is 15. I'm sorry. Let's say the delta is 15, but the theta is 30. Okay? I'm sorry. Let's say the delta is 60, but I mean, let's say the theta is 60, but the delta is 15. Okay? And the stock makes a $2 move overnight. It looks like it's up, but their contract is down. It's because you're not choosing the correct contract. Now, if you had chosen a next week's expiration to where the delta is 15 and the theta is 5, are you going to be up on that trade? Yes. So choosing the correct time value will have an impact on your trades. So make sure when you're trading stuff, you choose the right contract, because you don't want to get fucked over. And make sure, for example, this another example I want to tell you guys. Do you guys remember how how big the spread was on Amazon on Friday? Not the first 30 minutes, but like an hour into the market or 2 hours into the market on a Friday. It had a $30 spread between the bid and the ask. Or I'm sorry, not a $30 spread. It had like a did it have a it was like, so the bid was literally like 20, the bid was literally like 2,400 and the ask, I'm sorry, the bid was $24 and the ask was $30 with the fucking theta of like $800. So if you got into an Amazon trade, right, and it didn't really do shit, and you bought that, are you gonna immediately be down money as soon as you enter, or are you gonna be up? If the bid is 24 and the ask is 30, how much are you gonna be down as soon as you get into the trade? $600. And it was on a Friday. So imagine this. Imagine you get into the trade, you're immediately down $600. The price isn't doing anything for the next hour, and the theta is like 800, and you buy it at like 10 o'clock with 3 hours left until that contract expires. How much do you think you're going to be down? You're going to be down a lot, right? So make sure when you're choosing these contracts, you're choosing the right ones. Now, you don't necessarily have to focus on choosing the right contract if you're what? If you're scalping, if you're day trading for an hour, you don't need to focus. You don't need to focus on Greeks. Okay, as long as you buy the at the money one, and as long as you choose a stock that is liquid, that moves. Right? Don't overcomplicate Greeks. Only focus on Greeks. I only focus on Greeks when I'm swinging stuff. I don't need to waste my time on looking at the Greeks for day trades. For scalping, I don't need to waste my time. That's me wasting my time. That's me wasting time when I could be looking at other different setups. Does that make sense, guys? Who's ready to trade this week? Who's excited to trade? So I want you guys to utilize the chat room that we have, that I made for everyone, right? Kind of just conglomerate with each other and talk about your trades, because it's better when you're trading in an environment. Yeah, it's good when you're trading by yourself, but if you're new, you want to trade in an environment where you can learn from everybody else, because everyone usually has the same mistakes. And if you and someone else learned how to trade at the same time and they're doing better than you, you must be doing something wrong. Any advice for swing trades? My advice for swing trades is trading breakouts. Trading one day breakouts, or trading weekly breakouts. That's what you want to trade for swings. It's hard to make 100 with only 200. Yeah, of course it is. It's hard. When you have a really small account, it's hard. And also, right? Also, You guys need to have the right expectations when you're trading. It's like, dude, you have fucking if you're using a $1,000 account and you're expecting to make 1,000 every day, that's how many percent of your account? That's 100% of your account. Like I said, normal investors, the average investor, what are they looking for in terms of an annual return? Annual, yearly. So when these people, if they're using fucking $1,000, they're only expecting what? A year per year. $100 a year. Of course, some of these investors have like millions of dollars. That's why. But if you're looking at it from a standpoint where you're using $200 to trade and you're expecting 100% every day, come on, that's not realistic. You have to have realistic expectations. Now, what if you're aiming to get a 2% return every single week? 2% every week. That's 100% a year. That's only 2%, right? Let's do some math. Fuck it. Let me spend some time to do some math. Let's do this. You guys do the math. I'm not going to use my calculator. You guys use your calculator. Let's say you have a $1,000 account. You're using $200 per trade. Essentially, if you have a cash account, you can do this how many times? 5 times a day. Right? Now, let's say your stop loss is what? Give me a stop loss. 15% stop loss. First trade you take, you hit the stop loss. How much did you lose? Is it $30? You're sure? Minus $30. So essentially, are you risking $200 or are you risking $30? You're risking $30. Remember that. You're not risking the amount of the price of the contract is not how much you're risking. That's not how you buy a contract for $3,000. That's not how much you're risking. That's how much you bought it for. What you're risking is how much your stop loss is. Does that make sense? Now, let's say on the next trade, you take 20%. How much is that? Plus 40. On the next trade, you take 10%. How much is that? On the next trade, you take 40%. How much is that? The next trade, you take a 15% hit again. So how much are you up? $80. And this is not taking into account some of the trades that you're gonna come across that's gonna fucking get you like 100%. Because it's moving way too fast before your very eyes. Now, let's say you do this for the first month. Right? You do this for the first month. How many days, how many trading days is there? In 1 month, 20. What's 20 times $80? $1,600. Month 2. What is your account sitting at? $2,600. Right? Now let's go to month 2. If you go to month 2, so you do this. You're using 2,600, 15% stop loss, 10% risk per trade. How much is that you're using now? 260, right? Is that how much you're risking per trade now? %15 stop loss. I'm sorry, I didn't mean to put 15% stop loss. Now, what's 15% of 260? Minus, let's just say minus 40. And then you take a 20, and then you take a 30% trade. What is that? Damn, you guys are good at math, huh? Nishant? Jeez. Type that thing so fast. Okay. Then you take a 40% trade. How much is that? Jeez. Hire you as my accountant. And then you take another 40%, 40 loss. And then this time you get a 15% return. What's a 15% return? So you're not aiming for big returns, are you? No. Right? You're not trying to make $1,000 in a day, are you? No. You're only using 260 for how much you want to spend per contract. How much is all of this added up together for profits? How much did you make? 142 that day? What's 142 times 20? $2,840. What's 2,840 plus 2,600? So on the third month, you went from 1,000 to 5,400. Right? Let's just do this for the next 2 months, and then we'll stop. Just to see how much you would have gained. Right? Month 3 now, you're at 5,440. Same stop loss. Same stop loss for swings. No, you can't control your stop loss for swings. That's why you have time on your side. My stop loss for swings is probably like 40% because I'm not even using that much for swings to begin with. Does that make sense, Kyle? Make sense? Okay. How much are you risking now with 10%? %10 of 5,440. You take a 15% hit. What is that? $81 minus 81. And then you take another trade and you're up 40%. How much is that? $216. All right, 216. And then you take a 30, and then you get a 30% return. How much is that? Let's do this quickly. $162. You take another 81 hit, and then you take 20% on this one, on your next trade, on the last trade of the day. 108. How much are you in profit? $324 times 20 equals $6,480 for the month, plus 5,440. You're up, what, 11, so 12,000, right? You're at 12,000 now. You're basically at 12,000. Month 4, you're at 12,000. Do you think this is gonna keep compounding up to 100,000 by the year? This is not counting a big play. This is not even counting those 100%, 80% return that you can get. Now by month 4, by month 4, listen, you guys are getting too fucking excited here. By month 4, this is when you can start fucking trading Amazon. Because if Amazon is $3,000 per contract, is that how much you're risking? No, that's not how much you're risking. What's 15%? 450. You're risking 450. If you get a 30% return on Amazon on one Amazon trade, you spend 3,000. How much you make? 900. Right? Imagine making, so even if you average fucking $900 a day with 12K, 900 times 20, I don't even know what that is. 18,000. Is this starting to make sense for you guys? Stop trying to get those big ass returns every single day. This is breaking your whole account to 5 trades a day. Right? Of course, you don't need to use all of them. Right? You can take 2 trades, right? You can do this. You can take 2 trades, you profit 216 and you lose 81, and then you just go fucking go about your day. Because what's 216 minus 81? You made $135 that day. If you break down a 9-to-5 job that's paying $20 or $15 a day, think about it. Right? This is how I am like very, 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 very aware now, because I start thinking about how much people usually make per day. Like people on average, when I had a 9-to-5, when I was a server, when I was a sushi server, and when I was working at a warehouse, I was fucking making $13 a day. I mean, $13 an hour, $12 an hour, working 8 hours, giving them 8 hours of my fucking time in the day. 8 hours. Time is something you can never get back. When you can trade, when you start looking at trading like this, you're going to be a lot more happier. You're not going to compare yourself to other people, right? Because you're already making more than the majority of people out there. You start being grateful. You need to be grateful. I'm grateful. I'm grateful if I make $200 a day. Fuck, I'm grateful because someone out there has it a lot worse, and I don't need to compare myself to a motherfucker making 10K. Because I will get there eventually. Eventually. With time, eventually I'll get there. I'm not in a rush. You know what I mean? You're not in a rush. The market's going to be here 20 years from now. Market's going to be here 10 years from now. Does that make sense, guys? All right, I'm going to end this. Hope you guys have a good rest of your night. Let me know. Can you guys write down in the chat how today went, please? In the Discord. Thank you. You guys have a good rest of your day, and let me know how tomorrow goes. I mean, fuck tomorrow. Fuck Labor Day. God dang it. Can't even trade. All right. Night, guys.